Hey everybody, hey, my name is Darius Anucauskas and I'm the Global Market Analyst here at Markets.com. So I want to welcome you to this different section of the YouTube channel that we have. We have this newly created top news section where we're going to pick up on events, on economic events, which we believe are or could be the market movers. So, of course, this week we have the U.S. job numbers coming out. So not only the NFP, which is coming out tomorrow, but also we had the JOLTS, we had the ADP. We'll look into all that a little bit. So yes, before I jump in further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes. Like I said, this is our new section that we're going to be running here on our YouTube channel. So feel free to sign up and, in order not to miss any of these in the future. So just a quick little analysis on an event, which, like I said, could be a market mover. Now, also before we jump into the charts and all that stuff, let's have just a quick mentioning of our Markets.com website, which you can always check out for more information about us. So yes, feel free. We have a lot of info, and if you do want to reach out to us, please do. We'll try to help you out as much as we can. So, ladies and gentlemen, let's have a look at what's happening in the market. So first of all, of course, the quick glance at the dollar index. Recording this one on Thursday, so the market is already open in the US. And what we're seeing here right now is a little bit of a holdup near this little territory, this 107.4550 zone. I've mentioned this in my previous analysis. By the way, you can tune in into my Markets Talk webinar, live webinar, where you can ask questions every Monday, Wednesday, and Friday. So I've picked up on this index in one of my lives recently, and what I said that look, if you're looking for some lower levels on this one, of course, clearance of this territory is required. At the moment, we're a little bit in limbo. Certainly, the fact that the Fed is not really going for, let's say, more cuts, that should be in a way playing out positively for the US dollar. However, we saw some sort of like a little bit of weakness here kicking in. Okay, look, this movement here. I mean, this happened on Monday when the markets opened up and we had all those tariffs and everything, and tariffs and more tariffs in talk. So and then when initially the tariffs were announced, the dollar strengthened, but then I think that when the retaliation happened from Canada, from China, this is where I think that it kind of calmed down a little bit. So now, because the tariffs kind of got postponed a little bit, what we're seeing here that we're slightly getting back to normal in a way. So what I mean by that is that we're getting back into like monitoring the data. So so far this weakness is, yes, it was kicking in, but we're getting a nice little hold up around this area. Look, if you're one of those traders who are like looking for some more weakness on this one, as I said, especially from the technical perspective, you need to wait for a drop somewhere below this 107.4550 zone ish and below this 50-day EMA shown here as the green line. So if we do drop and stay below that, this increases the chances for a further decline, maybe towards the 100-day EMA or even below that towards the 200-day EMA. But again, step by step, slowly. For now, we are approaching this very carefully. I mean, I think that this is all quite good in a way. This activity is quite logical. We're balancing near a key level, especially before the NFPs. Now, Jumping into the job market. Now, in the US, this week we got, initially on Tuesday, we got the JOLTS job openings, which didn't really come out very well. They came out on the lower side. The forecast was already on the for a lower number, but it came out on the lower side as well. Then we got the ADP number. Now, the ADP came out on Wednesday. Where's that figure? Let me just find it. There we go. So that one came out higher than the forecast, higher than the previous as well. So in general, I know that a lot of people like to try to gauge their or try to correlate the ADP to the NFP. However, I strongly recommend not to do that because the correlation has been kind of lost a little bit. Now, what I would like to see here is basically I would like to, of course, I would like to see what's going to happen with the NFP number. Now, with the NFP, we have an expectation for 170K against the 256K last time. Look, in general, I would say I'm kind of leaning a little bit more towards the downside in a way. I mean, this number is for January, and I'm kind of leaning, like I said, a little bit more towards the downside. However, again, surprises do happen. We could see a higher number. And I think that this is what the Fed will be carefully monitoring as well, because look, I mean, they're now in this pause that they're not going to do any cuts, apart from, let me just refresh this page a little bit. Basically, by the end of December, by the end of this year, we're expecting 2 cuts. Okay, will that be the case? I don't know. We'll see, because again, we have a problem, with inflation picking up. So, and especially with this the new elected government, I mean, we need to be very careful in terms of like what's going to happen. So I think that this is what the Fed understands, and for now they're not going to do any more cuts. I mean, looking at the next March meeting, the expectation is for 85% here, almost 86. But yes, 85%, no cut then. May time. It's kind of slowly dropping, but still a high chance that there's not going to have like a cut not going to happen. June time. Now going into June, we're expecting something like a bit of a cut here. But okay, June, a lot of things can change till then. So for now, if we are approaching this from the fact that, okay, we're not expecting more cuts, then in a way the US dollar should remain on the stronger side, right? In a way, theoretically, yes. However, I don't want to think that this is the case, but maybe that right now it's like more of a buy the rumor, sell the news moment. So before the last meeting, when before the previous in January one, when we saw the bank kind of remaining the same, without any cut, that was already expected, and we saw kind of the dollar slowing down, because before, when we were getting those cuts, everything was kind of pushing higher. So that's why I'm saying that it looks like more of a like buy the rumor, sell the news moment. So we are now slowing down. So the rate of acceleration kind of diminished a little bit for the US dollar. And now the fact that, like I said, that we are expecting no cuts, this kind of gives me an idea that maybe actually the dollar could retrace a little bit, because maybe now it will be more dependent on the data. So we have a fact that there's not going to be, let's say, a rate cut or hike for some period of time. That means we can depend on data right now. So let me just double check something here. Yep. So this means that if this tomorrow comes out, let's say on the lower side, so no kind of idea about the that there's not going to be a cut would not support the US dollar. So I think that if this number comes out on the lower side, I think that this is where it could a little bit push it push the US dollar towards the downside. It's kind of giving an indication that maybe not everything is that good. Where's that unemployment rate? Unemployment rate as well. Now this is with the unemployment rate, another thing, another story. With this one here, I would say keep your eyes on the on the number here as well, because if it's going to come out somewhere above 4.2, if it's going to be, I know the forecast is 4.1, but if it's going to come out at 4.2, now that's where the problem arises, because we have been around 4.1, 4.2 for some time now, for like about half a year, and at last time in August it was at 4.3 that came out. So if that one suddenly starts creeping back up, now that's where, like I said, that's where the problem could arise, because this is where it could stimulate the Fed to go maybe and do the potential cut of the rate earlier than at the moment it is projected by June here. So maybe we could see that probability rising in May, for example. Okay, March, let's face it, yeah, maybe it'll stay like this, but for May, maybe we could see, like that chance increasing for a possible rate cut. So that's what I'm saying. So that's why this is quite important to watch, the January number, the January NFP number. So we'll see how it's gonna come out. If it comes out somehow on the higher side, I think that everything is like, business as usual, and yeah, we just kind of, continue as it is and waiting for other, surprises from the new US government. So then yes, then that's the thing. But if it comes out, like I said, for me, the most interesting part is going to be that if it's going to come out lower or not. So that's what I'm watching. That's what I'm observing carefully. Now, in terms of the number, where's that? If it's gonna, let's say, come out higher than the forecast, but below the previous. Again, I would probably put it more to the category, let's say, if it's going to come out higher. So yeah, it's just not, let's say, something that I think that the forecast is a good indication. I think that the 170 is quite an interesting number, and I think if we do have a drop below that area, that's, like I said, that's where we could see some weakness kicking into the US dollar a little bit. Now, how far do I think it could travel? Well, this is what I'm thinking at the moment, especially looking at this from the technical perspective. A drop below this 50-day EMA could, yes, like I said, open the door towards that 100-day EMA, and then further on, maybe towards the 200, and then we'll see what to do after that. So yeah, ladies and gentlemen, that's kind of it. I just wanted to, like I said, pick up on the US dollar and the NFPs, and what, in my view, how the outlook could go, and how everything could eventually play out. So let's see how this is going to play out. But again, like I said, it's quite interesting, and I hope you will have a great time during the NFP, because again, I think that this is the first one for this year and the January one. So hey, let's check it out. But as I keep on saying to everybody, ladies and gentlemen, do not try not to predict the market. I mean, try to leave the number, let it come out, and then you can do something about it if you're comfortable with it, So, but before that, try not to play Nostradamus, just, we don't have a crystal ball, and let's try to play it smart. Ladies and gentlemen, I would like to thank you, and yep, I shall see you later in one of these new sections here on our Markets.com YouTube page, which is called Top News. So hey, give me a thumbs up, like us, and hey, if you have any comments, please do share. I'm looking forward to that. So thank you very much, and I'll see you later. Bye bye.